First of all, I want to thank you for being here and having such a person of high caliber, of your level of professionalism. So it's a privilege and honor to have you here. And you represent yourself and your company to the highest. So congrats. So thank you for your time.
I appreciate that. Thank you.
Our company is designed, Tanya, to be able to empower the consumer and also to help our partners with their clients. So mortgage brokers, lenders, realtors that have clients that need assistance and have a company that advocate on their behalf, we're here for them. So we have a program set up for lenders and mortgage brokers, specifically in your area of professionalism, to help your clients to be able to increase their scores, be able to help them have control of their life again, because credit is very important. So we started this company to empower our consumers to get their credit back in place and be able to do the things they want to do in life.
Wonderful. That's great to know. So, Mr. Rodriguez, one of the first questions that we have for you today is regarding forbearance.
Yeah.
It's a question that's coming up a lot in our industry.
It is.
Mainly because of the fact that, because of the circumstances and the things that we're dealing with right now, a lot of people are finding themselves obligated to request assistance on their mortgages. So, can you tell me a little bit about how forbearance affects a person's credit?
Sure. It has changed a little bit through this COVID-19, okay? And that's an excellent question. In fact, my office gets calls all the time because we're in a situation financially that people have to make some tough decisions, and I respect that. Forbearance, it's been around for a long time, okay? And typically, Tanya, when you do a forbearance, it does affect negatively on your credit, okay? There's a huge gap, okay? But Congress took out a law called the CARES Act, and that's something that's very important. And I really want to let the consumers know, and also people in your industry, if you do a forbearance, basically a forbearance is that you're going to be don't make any payments for whatever months, up to 12 months of not making a payment. But there's a catch. Okay, the catch is this: at the end of those, let's say 12 months, you're going to have one lump sum you have to pay out. Not only with fees, but also the interest rates. Some lenders will work with you that you can make payments throughout the year, but you got to still pay it. So if your mortgage is $1,500 a month, and you do a forbearance, 12 months passes, well, the lender's going to want their money. So now you got all those months, plus the interest, plus the fees, plus your regular payment, then you're gonna be in a bad situation. Now, usually before COVID-19, it was shown negatively. Congress took out the law called the CARES Act that basically states that they can't put that negative on your account. Okay, it's not gonna show negative onto your credit report. So, like I tell our clients, if you do a forbearance and it shows up on your credit during this, you're going to have to prove that you're not without a job and it's COVID-19 related, and it shows negative on your credit, contact a lawyer or contact a professional like ourselves, and we'll be able to work with that and get that removed from the credit.
So in essence, will it show, because I know that I was having a conversation with a mortgage lender just a couple of days ago with regards to this, and he was basically telling me that it may not necessarily affect the credit, but it does show a lapse in payment. So if you're looking to attain a new mortgage, potentially, like maybe refinance, even cash out refinance, it does show that lapse, and then the new company or the underwriter can potentially ask you like, hey, what happened here? And when they say that, even though they're protected under the CARES Act, there's still a lapse. So in essence,
it is. So that's a tough decision. That's the reason I tell our consumers, our clients, if you can make a mortgage payment, make the payment. Let's not take advantage of that and say, well, guess what? We live in COVID-19 world, and because of the situation, we're not going to make the mortgage, and we're going to get a forbearance, and they're just going to work out with us, work out in 12 months or whatever the months they're given. They're allowed to do the forgiveness, because you got to pay that back, and it's going to be a lump sum, and it's going to be also a gap on your credit. So it's a tough decision. If you need it, do it. If there's a decision comes that feed your family or pay the mortgage, obviously there's going to be a decision that's going to be more important.
Absolutely. Now let me ask you a question. Is there such a thing as a deferment
Yes.
on a mortgage payment as opposed to a forbearance?
Mortgages, you can work with certain companies, and it's up to the mortgage, the lender. The difference with the deferment is basically states that they hold their payment 2, 3, 4 months, whatever the month is, and then that payment, that those 3 months are up, then they just be making normal payments. So they push those payments to the end of the loan. Okay. So there's no one lump sum. Mortgages, lenders, they really want to do the forbearance.
Okay, perfect. We do have a question here from our audience. Damien Damian Martinez, our mortgage expert from iMortgage Lending. How are you? Thank you for joining us. It says, when it comes to lending, it will not impact your credit score, but we need 12 consecutive payments done in order for borrower to purchase and refinance, which I guess, again, it's to your point, what he's referring to at this time with regards to, doing a forbearance and having that gap on your credit. So guys, I think the fundamental answer here is please pay your mortgages if you can. As far as the deferment is concerned, I do believe it shows better on the credit, but I don't believe it's as lengthy, right?
Typically it's 2 to 3 months. It's not lengthy. That's why you'll get the lender to do a forbearance. But typically they'll give you a few months. If you need something longer than that, then we're...
But the forbearance is different than the deferment. I just want to be clear.
Yes, it is.
Okay,
Yep,
okay, great.
absolutely.
And this is something that is an option.
Yes.
Okay, perfect. So, in trend to speaking of deferment, I want to talk a little bit about credit card deferments. Because I understand that a lot of people are also struggling. I mean,
Sure.
if we're having issues with a mortgage, I'd imagine credit cards are going to be, falling into the same scenario. So tell me a little bit about credit forbearance, credit deferments, and how it affects your credit.
Okay. On credit cards, if they do a deferment or forbearance, remember you're going to be paying those interests. Those 2 or 3 months that they're saying, okay, Mr. Client or Mr. Customer, we're going to do that deferment, that forbearance for 2 or 3 months. Those interests are going to accumulate. Okay, so again, got to be real careful with using that. If we need it, use it. But that gap, they're not going to forgive the interest rates. They keep rolling. Okay.
So in essence, because I did hear someone mention to me that if you don't make a credit card payment, right now credit card companies are basically saying something to the effects of, don't worry, we're not going to charge you the late fee, but they're still tacking on the interest is what you're saying.
Yeah. So whatever you're paying 23% interest, okay, you're not making the payment, but that's going to accumulate those interests. So you're going to end up paying for those.
So and could those interest rates fluctuate?
If you have a flat interest, depending on the credit card, okay, some of them are fixed 23% that you're paying on, or depending where your financial credit is, sometimes they could raise it, they could bring it down. So yes, to answer your question, yes.
Okay, and how often, because I mean, I understand deferments are common practice for people. I think it was you that mentioned to me not too long ago that people do this sometimes on a yearly basis. Is this something that gets done regularly by people? I mean, I don't think a lot of us know about this.
On the deferment, yes, some people will use it normally during Christmas for obvious reasons, right?
Yeah.
And they can exercise that. But remember, you're just making the mortgage longer. It's going to go to the end of the note. So you're just extending your mortgage. But it's something that is common practice. They've always existed. And typically the clients or the consumer that knows about it, they will use that on a Christmas time.
Okay, good. And so it's just a one-time thing.
Right, like a 30-day deferment, yeah.
A 30-day deferment, but it shows better on the credit.
Absolutely, yes.
And it won't show like that lapse.
Exactly.
Like for instance, like with a forbearance.
Exactly.
Okay, all right, so this is good, guys. I mean, we know that we could at least, for the time being, request a deferment from our credit card company and ask them to at least give us that additional 30 days. I mean, obviously you're not gonna pay a late fee and you will in turn end up paying a potentially more interest in the long term, but if you do find yourself in a situation where you do feel like you need to request a deferment, that is an option for you, for your credit card companies, as well as some mortgage companies, and it does reflect better on your credit, guys. So I think that's something that's very, very important to keep in mind for those of us that need that assistance. Now I'm gonna go into something a little bit different, because this is also a trend of what we're experiencing right now. So in recent weeks, a lot of retail accounts, Pottery Barn, Macy's, etc., they're closing accounts that are even in good standing. You could have a zero balance, you've had the credit account open for several months or several years, and then suddenly you get a letter or an email saying, hey, you know what, thank you for your service, we're closing your account in 30 days. So why is that happening right now?
Right. It's not just particularly right now. What's going on is, what that's always happened is we have the consumer that says, I got a great relationship with whatever, Capital One. Why? Because I have a whole balance. I don't owe anything. That means they're not using the credit card, so they can shut down your credit card for non-usage. And typically it's up to a year. So if you have a great standing, great, you're not using it because you don't owe no money to them, then they can go ahead and close it down for non-usage.
But is there a particular reason why it's happening now? Do you think that there's any correlation? Is it something that you feel like maybe retailers are sort of tightening their belts, just like, financial institutions in some cases? It
could. It's case by case, and they have the right to review your credit relationship with them. Also, like say, for example, in department stores, there's something that is called a sponsoring bank. So in some department stores, like for example, Best Buy and Walmart, they use Synchrony, okay? So that's a huge bank. So they'll say, well, this is a Best Buy credit card, but the sponsoring bank is this. So if they change sponsoring banks, that can also happen.
Okay. Well, thank you for that. Now we know why this is happening, guys. It's just something that, they feel like it's important for them to do it for lack of usage and potentially because they're stopping, doing business with certain banks as opposed to others. So that's good information. Thank you. Thank you for that. On another note, Jose, another question that I'm getting a lot is for those customers that are currently renting, that are not paying their rent. Because of the situation that we're going through right now, a lot of them feel like, hey, I'm not going to pay my rent. There's not going to be a repercussion for that on my credit.
Right.
So I kind of wanted you to kind of go over with everyone that's kind of struggling right now, how that could potentially affect their credit and what they can do to sort of protect themselves and try to avoid any long-term repercussions for not making that rent payment, if you will.
Sure. Now, rent doesn't show up in your credit, right? Typically doesn't show up in your credit. It's rent. But what will affect your credit is an eviction, okay? So we all do know, again, going back to if you can do it, make your rent payment because even though you're protected, obviously here in Florida, they're not doing evictions right now, but the moment that they do, you're gonna have a big lump sum. And with that eviction, you're gonna have to pay whatever months you didn't pay. It's not like a mortgage, there's no deferment, there's no forbearance on rent, so you're gonna have that lump sum. And also there's gonna be fees applied, even give you court costs, give you attorney fees, so that maybe that $3,000 rent you owe might become a $10,000 bill. So really think about it. I know there's some consumers that want to abuse the system. They have jobs, they're doing great, but they're not paying the rent because they think they can. And then this passes, COVID-19 passes, and then they're able to get evicted. Well, guess what? That's going to be a big nugget to be able to pay off. Okay?
Absolutely.
So definitely think about it. If you need it, you lost your job, many consumer has been affected. I totally respect that. And they can't pay their rent. You got to make a decision, food or rent. Obviously, food comes first.
Absolutely. Now, will this show as a judgment on your credit report? Or is it like it'll show like an eviction? I mean, how does that kind of show?
It can be an eviction. Also can be, there's different ways they can report it. It can be also a judgment they can do against you. But that's a different subject now on the judgment side. But it can also, the eviction can show up on the credit. Okay.
And now speaking of judgments, can judgments be removed from credit reports? How easy is it, and how we can kind of prevent that in the future, please, if you will?
Sure. If you have a judgment on your credit report, you need to consult an attorney or find someone that's professional like our company, because you cannot have judgments on your credit report. Okay? Judgments are not allowed to be in someone's credit report. So if there is a judgment on someone's credit, they can consult an attorney or come to us, and we'll get that taken care of.
Okay, perfect. All right, on another note, many customers have asked me why their credit scores are different depending on the company that is pulling their credit. Most consumers will use Credit Karma to check their credit scores periodically, and note that the scores reflected on Credit Karma are different than what their creditor is reflecting when they're pulling their credit. Most times it's a 2 to 3 point difference. However, the difference can be savings of thousands of dollars. Where can consumers check their credit to see the most accurate credit score for all three credit reporting companies? We know we have access to a complimentary annual credit report. However, credit reports are updated monthly. What do you recommend?
Okay, that's a really good question. I know a lot of the consumers use Credit Karma. And whoever's using Credit Karma, I'll tell you this, log into your Credit Karma account and look where those scores are from. It's a Vantage score, it's a Vantage 3.0. Unfortunately for Credit Karma and Vantage, there's not a lender that uses Vantage. So they're not going to be accurate numbers. It's a Vantage score. In fact, not knocking down Credit Karma, I mean, you get what you pay for. But it's a service. But if you Google Credit Karma, what they really are, they're an affiliate advertisement company. So they basically want to do is sell you credit cards, and they get paid on by every click. If you sign on to Credit Karma, you have like 1,000 offers of credit cards, and you might be pre-approved. What people don't know is that even if you click on it and don't apply, they get paid. They get paid for the click. So it's a Vantage score, okay? Now there's many FICOs out there. So depending if you're gonna purchase a vehicle, purchase a home, depending on what FICO they're looking at, FICO number 1, FICO number 3, depending on the risk factor. So I had a client yesterday that called me. He's at the Harley Davidson store. His his general FICO scores across the board. And he calls me, he goes, why is my FICO, the finance officer told me that it was in the mid 600s. Well, the risk factor is different. You're talking about a motorcycle. Okay, so not sure which FICO that we're looking at, but it's the risk factor. So it's the many different reasons why sometimes it can be off by 5, 10 points on the real FICO score, because it depends if you're purchasing a home. Also, if some mortgages will pull up a tri-mortgage report, right? So you're gonna get kind of all three of the scores. So again, it depends which FICO scores they're looking at.
So is there a specific credit monitoring system that you recommend for us so that we could get the most accurate credit scores and also monitor our credit, not using Credit Karma? Because we know that that's not like the best now that you've advised us of this.
Right. Absolutely. Now, part of our urgent credit solutions, not only, and I tell people and I tell our consumers and also our partners, we're not a credit repair company. We're a company that does credit repair because we do much more. We do business funding and lending, and we also do business credit. Now, a lot of our partners on the business funding, they want us to do, when we do pre-qualifications, they like to use Identity IQ. Identity IQ is very, very close to the real FICO scores. I really recommend Identity IQ. We use it for our process. A lot of lenders use it when they want to pre-qualify. In fact, they tell us have your clients sign up for Identity IQ because it's very, very accurate. It has all 3 credit bureaus, and there's some really cool features Identity IQ offers. In fact, if someone is interested in Identity IQ, they can log on to our website, mrcredit305.com, and there's an option there to sign up with Identity IQ.
Awesome. Thank you so much for that valuable information. On another note, if a consumer has good credit, when they apply for certain things, loans, unsecured credit cards, etc., sometimes they get denied, and the answer from the crediting company as to why they aren't approved will say, too many inquiries.
Yeah.
I don't know how many of you have gotten that out there, but I've seen it a couple of times, too many inquiries. So my question to you, Mr. Credit 305, is what is an acceptable amount of inquiries? Is there such a thing?
When you're purchasing, in fact, when I'm talking about business funding, there's some lenders that they're stipulating how many inquiries in a certain period of time, okay? Because the lenders are going to be, kind of scared. They're getting the credit pulled, and plus, we got to remember that an inquiry will cost you some points. So if you're a 700 FICO score and you go to a dealership and they look at your score, they look at your credit, which is very common, they pull your credit 10 times and they don't let you know, and then the dealership pulls your credit, that's 10 hits on your credit report. And it can be up to 15 points per inquiry. So you're talking about 100 points just like that, okay? Also, if you're purchasing a vehicle, we're talking about the vehicle side of it, there's something called straw purchase, which is illegal. So some lenders will get nervous because they say, well, this person had pulled their credit 20 times in one day. They're thinking they might be doing some things illegal, maybe purchasing their vehicle and multiple vehicles in their name and somebody else's. So those inquiries are very important. When you're looking at some lenders, when you're buying a home, they want to make sure that there's not so many inquiries in a certain period of time. So definitely, definitely don't want to get your credit pulled unless you completely know that you're going to make that purchase, you agree to the terms, because it could damage you. There's some inquiries, now there's not a specific amount, right? But it could hurt your scores, it will hurt your scores, and also a possibility to be approved.
Okay, so is it that you're trying to do too many all at once?
Yes.
Is it the different things that you're pulling? Is there a time period, do you think, between one inquiry and another? Like, some people buy a house and then they want to buy a car 3 months down the line, and they may not get it because it's too many inquiries. So it's just kind of understanding. I know that a lot of the times they say it's an algorithm, how these credit scores are sort of updated in the credit industry, but unfortunately, I guess what you're saying is there's no rhyme or reason as to how many is too much and how many is too little.
Exactly.
Okay, guys, well, just keep it to a minimum when it comes to the inquiry so that you don't get that letter in the mail. Thank you. Thank you for that. And finally, Jose, is there anything else that you recommend consumers do at this time to protect their credit, separate from everything we've already discussed?
A little bit about me, and I have a passion, what I do, but years ago I was a police officer, and one thing I learned as a police officer, so I was first responder, is what happens with fraud. Okay, people don't know that down here in Miami, and if you're here in Miami, this is the fraud capital of the world. And one of the things that I recommend everybody is to make sure that you keep an eye on your credit. Everybody typically, they look at their bank accounts 2 to 3 times a day, okay? I know I do it. They want to see if there's any movements, but we need to be the same way in regards to our credit. Okay, so look at your credit, use a credit monitoring service. I recommend Identity IQ, but there's many out there that they're really also good quality monitoring service. You gotta be responsible for your own credit. Check at least once a day. Make sure there's something that looks weird, some inquiries that you didn't authorize. Maybe there's a lot of identity theft going on. Not only we have COVID-19 right now, people are taking advantage of the situation, and we're also technically still in tax season, which is a really time that's there's a lot of fraud going on. So my recommendation is very simple, is keep an eye on your credit, use a real monitoring service that's going to provide you that information that you need, and you can avoid some headaches in the long run.
Wonderful. Now, if our audience wanted to get a hold of Urgent Credit Solutions or of Mr. Credit 305, how can they go about doing that?
Best way is, I love to show our story, okay, who we are, we're going to talk about, and I want to know that everybody knows what we can offer in the community that we serve. Go to our website, mrcredit305.com. Right there, you're going to get a lot of good information in regards to credit, about what we do as a company. It's going to have our phone number and our contact information, so it's very easy. Mr. Credit 305, we'll love to help you. Our intention is to empower everybody to do what they need to do in regards to their credit. Credit is no longer just about buying a house and a car. It's your identity. Some people can't even get a job because of a credit. So I take a lot of pride to help people with their credit. And in regards to credit, it's not a one-size-fits-all, and not every company is built the same. Most companies out there, they just want to spit out letters, and they want to use a template, and they think that's just disputing not mine or using wrong excuses. When you're talking about credit, you got to understand the client's concerns, what their mission is, what they're trying to accomplish, and really credit is talking about federal and state laws. You have to understand federal and state laws to be able to assist a client achieve the goal that they want, or a partner like yourself with their client.
Well, thank you.
Thank you.
This has been very informative. I'm very excited to have been here today sharing this valuable information that Mr. Credit 305 has shared with us. Should you have any questions for me, please inbox me. You can email me, tortega0515@gmail. My name is Tania Ortega of the Oscar Arellano team at Berkshire Hathaway. Thank you again, Jose, for having us this afternoon. It's been really, really great.
Thank you.
I look forward to doing this again and speaking to all of you soon. Bye.